catchy music. It's all crap. It's all crap. That looked terrible. It looked terrible. Well, I am what I am, guys. Good morning, everybody. Let's try to get ready for quotes. We got 5 minutes. There we go. Lovely music, huh? Lovely music. It's the only way you can do it without getting blocked is play this AI generated boring music, but gotta go with it. All right. Looks like everything's down today. Genius Brands is down 3 cents at 67 cents. Finger is flat at 149. Oh, swell. Nixie is down 2 cents at 109. MTEN is down 6 cents at 70 cents. And Railtown, as you know, closed at 27.3. It's bidding 26, asking 29. I'm sure these guys are going to attack it because that's what they do. President Trump gave 2 more holidays this year. So my guess is today, tomorrow, next Monday, next Tuesday, and the half trading days are what's left for them to destroy the stock. Basically this year, it's really just these 2.5 days they have left for this year. So don't be shaken out of it, and do not put orders under the market. And I'm sure you've enjoyed this crap long enough. Do not put stop limit orders under the market. That is, they see them, they'll come take them, and then you've protected yourself from, I guess, a 1 or 2 day anomaly to the downside. And then when the stock snaps back, you're not going to be in it. So it's a foolish mistake. They train you to do that. You got to realize this landscape, I don't know how to get rid of all that sunlight. This landscape for markets is designed for the banks and their cohorts, their co-conspirators, to steal from you. And that's all it is. So you got to be smarter. It's like walking down an alley after a certain time of night, or right now, currently walking in the middle of London or Paris. If you're a young woman in the heart of town during the day, you got to be wise. You got to be smart. You got to understand that these people are going to come and try to attack. All right, we got 1 minute till the opening, and I really don't know. That'll go away. I don't know how to get rid of it. I guess something like that. Well, I guess if I sit forward a bit. All right. 1 minute, we're going to open. Now, the reason I'm doing this morning is, again, I think these guys are going to put pressure on the stock for the next 2.5 days. I don't want to be on long this morning because I've got a lot to do. But I want to talk about maybe a little bit of our strategy next year. And not just Railtown, maybe. But the main reason I'm on is so that you guys, now, here we go. We opened at 27. It says the low was 26. So let me just show you that. Somebody sold $26 worth of stock this morning to scare you. They sold 100 shares at 26 to scare you. There's $26 worth of stock. Then they sold 100 at 27, and somebody simply had to be out of that. Now, I'm sure the other volume here, 490, might be a buy. But I'm sure the volume up top is going to be, so that's a total of 690 shares at the opening. And I'm sure up here it'll show more volume. It does, 4,140. You know that they're going to do this. You know they use, now the bid is 43,500 shares, but somebody has to sell 60,000 shares at 28 cents, 60,500, 10,500, just have to sell it. Guys, this is manipulated markets. This is selling stock that doesn't exist. This is the privilege of being a market maker, of being a bankster, of being some hotshot with access to somebody else's capital and market maker exemption to just manipulate the stock price. It will end in the case of Railtown. It's not going to end in the case of every other stock out here because it's just impossible to fight. It's impossible to fight. Many of you look at the price and you assume, one, it's telling you something. All it's telling you is manipulation. Two, if the news is so good, why isn't somebody cheating in Canada on the long side? It's not going to matter. If somebody has a buy order for 200,000 shares, once that's filled, the selling continues. It just doesn't stop, and nobody changes it because canards like, well, short selling is good for the market exist. Of course it's not. It's like saying tattoos make women beautiful. All right. Now they got the bid at 26.05, 26.11. They're gonna get it down, try to get it down today. This is your chance to buy the stock. Now, at At early afternoon today, I'm been invited to talk directly with the company. It's private with me, and I'm going to do it across, what do you call it? A video call, like a Zoom call. And I'm going to get the full-on presentation from Railtown. I've been promised that I can use as much time as I want or need. Um, Believe it or not, the company was quite complimentary. They gave me a lot of praise for what you guys have done, all this buying and all this, what we've created here. I don't say it because it's about me. It was nice to finally get some positive feedback, unexpected. But anyway, that's going to happen right after lunchtime, my time, and it'll probably go on for at least an hour and a half, maybe longer. So I'm not going to be able to come on this afternoon until late. And I'm really excited about it. I think it's going to be a great opportunity to speak directly with the company and ask questions. So one of the reasons I'm coming on now is for you guys to ask me what you want me to learn. I may try to get one or two people to join the call with me, but I sent a request for that Saturday. I haven't heard back, so it looks like it's just going to be me. I wanted my associate to come on, but I don't. They haven't given me permission for that yet. So it's 27.3 to 28.32. Now it shows 19,000 shares. But that's not what shows. Remember, they did 100 shares. They did 100 shares at 26 cents. And now 100 shares at 27 cents. The last trade was 7,588 at 27.69. And, it's all manipulated, but this is your chance to take advantage of that manipulation. This is your chance to. Now 10,000 shares just went off at 27.69. Let's see if that's in the middle. My guess is that's a sale. Now we have 52,500 for sale, and 27,000 for sale, and 60,500, and 30,500. Nobody's selling. It's all a trick to get you to think, oh my gosh. Remember, they have 2.5 days to dump this, to cross, to cheat, to move shares out of their good accounts to bad accounts, to break the law, and nobody cares. Can I show you this? In the case of the over-the-counter markets, can I show you this PUFTA? Here he is. Since 1997, this ineffectual piece of crap has run the over-the-counter markets. R. Cromwell Coulson. He's a completely useless, bought and paid for CEO. He's overseen the destruction of more dreams, more money probably than Pablo Escobar, in my opinion. But look at that smirk. Anyway. Here's more pictures of this lightweight. It's not going to change. It's just not going to change. Cromwell Coulson, Lifetime Achievement Award and dedication. What the hell is his achievement? Anyway, let's go look at the price of the stock. 27.3 to 28.5, 52,500 for sale. Of course it is. Of course it is. It's been for sale. That same 52,500 shares has been for sale since it was 69 cents. And it's been there since for 6 months. It never goes away. And Chucky Coulson gets a Lifetime Achievement Award. You should write a letter, but you won't. We'll make some money and we can hire a lobbying firm, and our goal should be to get him fired. All right, so the volume is now 40,000 shares, and last trade 10,000 shares at 27.9. I would guess that is a buy, obviously. But it's never, no one ever suspects the deacon. It's never at the ask. It's never at the ask. Why should anything ever go off at the ask? We're helping our clients. Chucky Coulson has designed a market that you trade essentially for free. And we, with our high frequency trading, we make sure that you get a price that's cheaper than the asking price. But at what cost? All right, let's see what questions you want me to ask. I want to go over, I want to start with one thing, and I'll do it theoretically first. I wrote some things down, but we can do it from memory. While you're watching this stock over the last 2.5 trading days of the year, it's the cheapest you're ever going to see it, in my judgment. Why? Well, the shorts have just kept the pressure on Maximivo, however you say it in Spanish, maximum. And so you know that. Another thing you know is there seems to be a blackout on news, which is material, and that's led to a blackout or a blockage or whatever you want to call it of buying. The other thing you know is it's vacation time. Everybody's gone. So it's the perfect time to sell, although ironically the stock is slightly green. But come 10 o'clock, 10:15, 10:30, 10:45, they're going to hit it. They're going to hit it. And that's what they do. And that's what Charlie Chucky Cromwell, the smiling sleazebag, allows them to do. Because he's bought and paid for it. Of course, that's my opinion. I can't prove any of that. But all the evidence is hidden. We'd have to hire a lobbying firm or a law firm or a detective to go find out how many companies, thousands of companies, CEOs and new college graduates and working people and boards come with business plans, and all of them are crap. They all need to be cleansed off the face of the earth by these people. And then attorneys like Mark Bazile come and help the so-called financiers settle with the CEO, so there's nothing comes to light. He plays his guitars, Cromwell gives his shit-eating grin, and the stealing goes on. It is a network to take from you. So stop playing it. Stop playing it. Now, why is Railtown different? Railtown is an over-the-counter stock in the sense that they're a Canadian listed stock that went public prior to this boom in AI financing because they were going to need capital. And they had the illusion that Chucky Cromwell is a good man. He's a complete loser. So they went public here to trade. Well, it just opens up high frequency trading. Why do you need high frequency trading for a stock that otherwise would trade on appointment? Why do you need high frequency trading protections for who's doing it? You don't know who's doing it. Why do you need purchase of order flow for over-the-counter stocks? Because Chucky's paid off. That's why. But you're not sick of it. You look at it and you go, oh my God, there's something wrong with this stock price, and it must mean that it's a bad story. If it were a good story, people would be cheating up in Canada and buying it. Well, that's ascribing to Canadian directors and wealthy men and women and people of stature in Canada the same scumbag characteristics of the over-the-counter market participants that Chucky Cromwell encourages. He's the scumbag. How do you know the Canadians are going to do that? And then you think, well, my gosh, if it were so great, they wouldn't be selling. They're not selling. Nobody that owns this stock is selling. This is fraud. And Chucky, the smiling poofta, gets credit for a lifetime achievement award. It's incredible. It's incredible. Anyway, let's not go off on that. We all know that's what's going on. But this gives you a chance to really add to your position of Railtown. Really add. I would be doing it, except I have no money. But I would buy every bit I could do right here. And that's what I think you should do. At a minimum, whatever you buy in Railtown, I think you're going to have a January effect, which might go into February, where you can buy the stock under 30 cents and sell it at 60 cents or 90 cents at the end of January at a minimum. And that's my judgment. Of course, you have to make your own call. That's the January effect. There's tax loss selling going on here. There's people that for some reason put a year-end deadline on their investment strategy and they're going to go out. There's people, which I just feel so badly for, like Brandon's friend, who thinks they're doing the intelligent thing, which they would normally. But remember, Brandon's friend believes that the over-the-counter market is a fair market. He believes that Chucky Charlie, the poofta Cromwell, is actually doing his job. It's not. He's not. The market is completely a free-for-all, except it's not the house that wins. It's these criminals that win. So you can't put stop-loss orders in. But that's what they're going to try to do. They're going to try to come down and take as many stop limit orders as exist. And then they're going to say, we had fun with retail today. You guys and me, says sucker right on top of our forehead. Don't be a sucker. Pull your stop limit orders and go in and aggressively buy today. That would be my strategy. All right, what are some of the things we know? We know the denominator. We know how many shares are outstanding. I mean, we don't have it right down to the last share, but within a very narrow range, a tiny range. There might be an extra 1,000 shares or some employee options might have been given out or something, but it's not big. We're not off. We have numbers from the end of August. Again, there's been a lack of transparency. All right, here we are in the green, 151,000 shares. They want to take advantage of you. You should be buying everything you can buy. You should be getting your backs against the wall. You should be becoming plumb dog mean. And I mean mad dog mean. Because the only thing that's going to save you from dying, separate you from dying and living, is to stare these bastards in the face, pull out your gun, and act. You got to buy. You got to buy. All right, it's 161,000 shares. Anyway, we know how many shares there are. We know that the criminals, one of their strategies is to bust any acquisition, and they didn't do it. The AIP acquisition got completed. The other thing they want to do is make sure that to finish an acquisition, the company has to issue more shares. They didn't. They actually issued fewer. We also know the shorts want to cause the company to do a financing, which is going to result in unlimited potential dilution and new shares. The company didn't do it, and the company doesn't need to do it, and the company won't do it. So all of their tricks, they only have three. One is to sell. Two is to attack anything good, hoping to break it up or at least suppress the price so that the acquisition number of shares changes to their benefit. And three, destroy financing. Use any kind of predatory financing to destroy the market cap of the company. None of it worked here. The only thing that's working is they have gotten the price down. And some people, like Brandon's friend, lost their shares. But it's after Wednesday at 1 o'clock. I think it's a half day on Wednesday. Tax loss selling will end. Year-end discussed selling will end. Advisors, if there's any still working, calling clients their recommendation will to sell, let's buy an ETF, that'll end. If there's any brokers calling their clients, just doing some year-end ideas, surely part of it will be, we don't follow these stocks. And have you considered taking a tax loss? We have a new Merrill Lynch millennial entrepreneur startup fund that our analysts have put together, which we believe is going to give you a chance to participate in outstanding returns for the next year. And right now we have an offering. You can come into it at the offering price, $10 a share. And I'd like to just consolidate how do you feel about that? Great. Well, she just made 4.5 or 6.5% gross on getting you to do that. And the selling happens for tax loss reasons. And that's what's going to happen today, tomorrow, and maybe Christmas Eve. Don't pay attention. And then the idea is, well, the stock's telling it's all red. It's always red. It's been red. When are you going to give up on the stock? I'm not going to give up on Railtown until something fundamentally goes wrong. Now, am I being stubborn? Yeah, a little bit. Am I being an idiot? Maybe a little bit. I don't think so. I'm mad at these bastards. And I'm not going to be shaken out. Of course, I don't, I was shaken out in Finger. I was shaken out in GTII. What a brilliant idea. I was shaken out in Vocal. Logic. We've seen all this gamemanship. The difference here is we're in an industry where there literally is an arms race to buy companies like Railtown. We're in an industry where if Railtown were private, it'd already be worth $1.5 billion. We're in an industry where there's more money that's going to be allocated to AI 2.0 and to software development. We're in an industry where the addressable market is over 300 billion with a B dollars a year. And this stock trades as if it's going to go out of business. All right, it's slightly green, but that doesn't matter. 26.49. All right. A couple other things we know. We know that the company is in agreement with TELUS such that if TELUS brings customers to TELUS's own data center, and if Railtown brings customers to TELUS's data center, they're going to split revenue. They're going to split the revenue. We know that the TELUS data center is, well, I Googled it. Google could be wrong, and I showed it to you. The TELUS data center is the only sovereign AI data factory in Canada ready to go. And they built 2 of them. All of the competition is in various stages of development. And I got that from Google. I'll try to find it for you again. We know that that data center is state of the art. It's NVIDIA chips. It's green. It's all virgin capacity. And we know that TELUS wants to emphasize its revenue from this new industry. They're not poaching. They're not poaching an existing mature industry. This is a new industry, the industry of AI software development. And they want to bring Canadian software, Canadian AI to the Canadian sovereign data center in Uskamiski, Canada. We know that. We know that that was announced, that data center was announced in the summer. So we would assume they've had plenty of time to build it, frame it out, test it, have it inspected, put it through its paces. So soon, and for the rest of your life, that data center is going to be up and running. We know that the AIP network has almost 200 companies in it. We know that 125 of those companies are doing 120 million annually in spending to host their AI products. They're hosting elsewhere, all the other hyperscalers. We know these are Canadian companies. Where did we learn this? Rebecca Kurzweil did an excellent interview with Dr. Tom Core. We learned it there. It's also in the corporate presentation. So we know that 120 million in revenue is going to move to the TELUS data center. We know that the 200 companies do over 400 million in current revenue, and Railtown now owns that network. They don't own that revenue yet, but the whole plan is to emulate the Constellation software strategy of acquire and consolidate. And I hate the word. They're going to create synergies by doing so. They'll acquire companies at a discount by increasing revenue, sharing know-how, sharing platforms, cross-selling. They'll not only grow revenue, they'll grow the multiples assigned to that revenue. Now we're at 241,000 shares. You know, I had a dream last night. It woke me up. And I don't want you to count on this, but the stock in my dream went to, you know, I don't know. I don't remember the initial $2, $3, $4. And then all of a sudden, it was 29, 31. That's when I woke up. There's always, we know there's a large short attack on this. It's always possible. I hope to hell we don't get a short squeeze in this stock. It's 241,000 shares traded, and 10,000 went off at 27.84. 10,000 went off at 27.16. 10,000 went off at 27.52. 10,000 went off at 27.68. And then 1,500 goes off at the bid. And all of the buying, all of that buying, which could be selling, is in the middle. And it may be somebody just disgusted. I want out of the stock. If that person is selling, they should maybe think, well, how come the stock's not going down? Add another 10,000 at 27.18. Somebody's coming out of the stock. I would say those shares are real. Somebody's selling their position. It's a shame. It feels good to do things like that because you can't fight the short sellers. You can't fight that the law requires the company to be very careful in their disclosure of material information. You can't fight that everyone's on vacation. You can't fight that everything now has been delayed probably about 6 months from our original timeline. You can't fight that the stock's gone down from 38 cents a year ago to 28 cents today. You can't change that. To get buyers in, two things have to happen. News has to come out, and then investment committee meetings have to occur, and research has to come out so it can be put into the file. And then on top of that, you need the stock to break certain thresholds, $1, $2, $4, $5 before buying comes in. And you can't fight the fact that you're going to have to wait to hear about revenues. So what feels good is just selling. Damn, I can get out of it. I'm going to show William. I'm going to show he was totally wrong on that trade. I'm just going to get out. And I'm going to protect myself, what? 27 cents? You're going to protect that? No, I'm just going to get out. I'm going to go into an ETF. I'm going to put it in cash. I'm not going to put it in silver 2.5, 3 years ago, and 2 years ago, and even a year and a half ago at $25, $27, $28. I don't know how that market's too small. Don't trust it. Well, now you could have tripled your money in silver, but no, not going to give William credit for calling that. So it feels good. Just get out of it. Blow it out. It's not going to feel good next month, next quarter, when the stock's $3, $4, $5. But all you can do is choose what side you're on. Are you going to just act because it feels good? I'm doing something. I'm getting out. Bill Miko got out and he saved 10 cents at least. He got out at, I forget. It might have been as low as 32, 34 cents, but right around 38 cents, he got out of some of his stock. But he bought GDC, which was a great buy because there was a press release that said that GDC was worth $22 a share. I mean, you can believe press releases. Now it's $5, $5.25. I think he paid $7.5 for that. Well, it's not down as much. I don't know. That might be the same percentage down. I don't know. It doesn't look like it's going to go out of business or anything, but that's got a market cap of 200 million. And what is it? It's a story. It could work, no question. Railtown has a market cap, according to Morgan Stanley, of 56 million. We know it's going to have revenues. We know they're going to roll up these companies when the stock price gets higher. We know well, we don't. That's one of the variables. We don't know what multiple will be assigned to those revenues. We know what has been assigned as multiples, but we don't strictly know. That's a projection. We know how many shares there are. Railtown did not destroy its cap table the way DBMM did, the way MMAT did, the way CRTD did, the way COSM did, the way GTII did, the way FNGR did, although Finger, with the help of a friend, reined that in. But how do you get half pregnant? Unbelievable. 266,000 shares. Last trade, 5,000 shares at 27.47. No. It's all the same. All right, let's go through some of your comments and see if you have any questions. And let's try. I didn't mean to get worked up. But I hate seeing it. I hate seeing this theft. I hate seeing that you justifiably should be able to expect that this market is fair and someone's looking out for you. No one's looking out for you. This price is totally wrong. On the other hand, it's where it should be given the limp wrist efficacy of Charles Crawwell and his organization of smiling liars, self-congratulatory nincompoops. This is where it should be. And same in Canada. But it's not where it should be based on what it's worth. I remember markets that with the kind of upside and knowledge that's out there on Railtown, this stock would be $4, $5, $6 right now. But it's not, because we cleansed the markets and allowed the Burroughs Park boys to just destroy market caps. I just saw 30 cents, I think. My eyesight's not, maybe I didn't. Maybe I didn't. But the bid is 26.72. It's all, what do you guys call that when it's computerized? It's all computers. It's just computers talking to each other. That'll stop next year too. All this selling. It won't initially. It'll be gradual, but it'll stop. Man, I wish I had some money. All right, T. Alex came in number one. T. Alex, good morning, William. Marty Party, good morning, Bill. Giuseppe, buongiorno, buon Natale a tutti. Buon Natale a tutti. I love it. I love it. Fast Eddie, morning, Santa. It's Christmas time in Washington. And Democrats rehearse. It's Christmas time in Washington. The Democrats rehearse. Getting into gear for 4 more years. Things not getting worse. Republicans drink whiskey neat and thank their lucky stars. They said he cannot seek another term. There'll be no more FDRs. I sat at home in Tennessee, just staring at the screen, with uneasy feeling in my chest, wondering what it means. All right, Marco, good morning. Jack Hamilton, Florida Keys, wow. Wow, Jack, I wish I were fishing on a kayak and listening to me. Wow, I'd like to be fishing. That reminds me of don't be offended. It's just, it's more, maybe I shouldn't tell that joke. A young kid told me the joke. It's a stupid joke. I won't tell it. T. Alex. There is a lot of infrastructure that needs to be built. The equipment and computers need upgrading and replacement sooner or later. One of the reasons TELUS is making a big investment in AI. That's true, but remember, Railtown's piece isn't so much infrastructure. Railtown's piece is a critical software platform. It takes advantage of all that infrastructure. Jack Hamilton, if I don't get any reception for a while, Merry Christmas, sir. Merry Christmas to you, Jack. And remember, that's the most important thing, is to enjoy this time of year. Hi, June. Good morning, William. Merry Christmas to you as well. Thinking of you today. All the best for the holidays. Wishing you excellent health. Thank you. Thank you very much. Pidson. Hey, William, how are you doing? I've been following your channel for, I think this is going to go negative. I've been following your channel for a couple of years now and always loved your content. Hey, that's positive. In 2025, I had other stuff in mind than the stock market, so I'm a bit out of the loop. Would you mind? Yeah, this is negative. Would you mind giving me a quick recap of why you stopped following Ham Finger? Did you have disagreements? Are you still a shareholder? I guess I'm the opposite of that character in Paul Newman's last movie, where he played basically, I guess, I can't remember if he actually drank, but he played a down on his luck, drunk, uh, uh, earlier in his life, irresponsible, bad father, bad employee, all that kind of stuff, living in a woman's house. I think he had a daughter. I think he picked up odd jobs. I forget the name of the movie, but no one liked him. But then slowly you realize people did like him, and they did respect him, and he treated people well. And several times in the movie, I forget how, people asked him about that oddity, and he said something along the lines of, I grow on people, or I'll grow on you. Maybe I'm the opposite. Once people get to know me, they can't stand me. I don't know. Let me start with the second part of your question, Finger. It's not that I don't follow Finger, but I interviewed Finger. I never charged for that. I didn't make people pay for those interviews, as someone recently did. I was a shareholder in Finger. I bought in pretty early when Ham started talking about it, but I've since learned that Ham's been talking about Finger for 10 years. It's nothing new to the story. But anyway, I got in and the stock went up. So a friend of mine introduced me to Ham, and I did start following it. And I thought it was a compelling story. This is 4 years ago, in many ways, but I also believed, from my own experience, I believed that with such a large short position, that a buy-in would occur. That's completely wrong in retrospect. Earlier this year, I subscribed to the Morgan Report, which you all can do. It's a monthly, well-written piece on the precious metals markets with a particular focus on silver. But earlier this year, I think it was February, may have been March, he put out well, his monthly report, and he always has a letter in there, and he spoke about the Great Taking by David Rogers Webb, The Great Taking. You can get this online. It's a book. And I read Dr. Susan Trimbath's book, which is back here, several times. It's a real slog. But the core awareness that I learned was that under Bill Clinton, the markets, the U.S. stock markets changed irrevocably. Under Bill Clinton, the UCC Section 8 was changed to allow brokerage firms to give you, on any stock you buy, a securities entitlement. And in fact, David Rogers Webb argues in a well-researched, well-footnoted book that every security, from bonds to precious metals to stocks, every security, what Wall Street gives you is a securities entitlement. Under Bill Clinton and Secretary Rubin, he allowed Wall Street to put all shares that people call real shares, that put all shares purchased on behalf of their clients. Brokerage firms could pool those shares at the depository trust company. That pool of shares then becomes the collateral for gambling on Wall Street. Derivatives, creating derivatives for stock loan desks, for hypothecation and rehypothecation of shares, all for the benefit of the house. There is no commandment to buy in the hypothecated and rehypothecated shares. And you've seen it, but you don't want to admit it. You saw it in GTII, you've seen it in Finger, you've seen it in endless other shares. So, bottom line, I do not believe finger motion will ever squeeze, ever. So that's a change, and I've been talking about that all year. With finger motion last August, whenever that movie, that stupid movie was going to be done, Ham called me probably a dozen times, and then he had other friends of his call me. He had the movie crew call me. I was sitting out having a cup of coffee with a pen and my dog, and I was in the sun, and I was, laying out my strategy for what I would do with my account that Friday, which was options expiration. Are you dead? Where are you? Why aren't you there? You've got to be there. They're waiting for you. You better get to the SEC. There's 8 people waiting for you. Where are you? Blah, 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 blah. So I threw my coffee away, pulled my dog home against his wishes, took a lightning fast shower since the hot water would end in 2 minutes anyway, and Ubered over to the SEC. No one was there. Absolutely no one was there. I had to wait an hour and a half. But when they came, I did my interview. It was long, and then we went to the SEC. I bought, maybe not for everyone, but I thought I did, at the coffee shop. And then obviously they've been driving. They just had coffee and a muffin or whatever. And it came around, I don't know, 2:30 and 3 o'clock, something in that range. And I said, have you guys eaten? No. And I said, well, come on, it's nice weather. We can sit outside, maybe over at the Dubliner. And that's what we did. We went over to the Dubliner. We sat outside. All good people, very good people. We discussed their strategy with the movie, the young people, and the one older guy like me. And I was the host, and I spent my time polite. Well, I was enthusiastic, but I was trying to show politeness and the generosity of a host. I paid for everything. Anyway, I didn't get home until 4:15, 4:30. And during it, I was checking my screen every now and then. And all the calls I owned on Finger were not all of them, but a good chunk of them were worthless. There was no bid by that time. Of course, inside, I'm saying to myself, I should have stayed right where I was, having my cup of coffee with Lucky. And had I stayed, I would have made the hard decisions to sell that, and whatever. Because that's, after years of doing this, that's what you have to do. But instead, the bids, shockingly, went to zero. The stock was down a buck and a quarter or something, after being strong for weeks. I think it might have been down $1.50. I couldn't do. There's nothing to sell. So I lost a lot of money going to that movie interview, which still hasn't been broadcast. I wasn't paid to do that thing. It was a mistake. I don't blame him. I blame myself. I should have said, I'm not doing it. If you want me to do an interview, come back. We'll do it this evening, or we'll do it tomorrow. But I didn't. I was trying to join this fight for everybody. So anyway, without going into too much more detail, the closing price of some of those options were a penny. No bid, but they were a penny. So Morgan Stanley, I guess that's why, because E-Trade had been purchased. I don't know why. They exercised them all. So I scrambled Monday morning, sold all my other assets, I called in I said, I'm going to bring in enough money. I called where I could. But as predictable in the attack, Monday morning, they kept the pressure on the stock. So they drove it down. They knew what they were doing. So Morgan Stanley covered everything, sold everything out, wiped it all out. And my account was wiped out. Almost. I mean, I still had a little bit left, but it's essentially wiped out. I think I lost, Pidson, 125 grand because of my idiotic choice to go do that interview. I should not have done that. I would have lost money that day. There's no question, but I would still have a slug left to make good with. Instead, I was completely wiped out, and I had a diminutive amount left in my account. Well, of course, the next 2 days, 3 days, Finger rallied all the way back to where it was on Thursday. But that's the nature of their attack. And so that wiped me out. And once Finger was up, the shares that I had converted all my other assets into, it wasn't very many. I'd say it was, anyway, it doesn't matter. My memory is going to be bad, but it was just a few thousand shares I got out of. And I had other things. When you get down that low, you have expenses. So I got wiped out of Finger. I do not own Finger. Now, earlier this year, I called a rally in Finger, and I made the suggestion that from around $1.04, that I thought people could buy the stock and see a 2, 3, 4, 5x return on their money. I thought the stock could go to $2, $3, $4 a share, and maybe even $5 or $6 a share, maybe $7. And I said so repeatedly. It was gaining momentum. It was trading with that momentum. And partly that's when people buy calls, they create premium. That premium gets computers to buy the stock and sell the call, and it's a self-fulfilling cycle, particularly if a lot of retail is buying. And that trend was showing up on the chart. And I said so. But when the stock got to $3, $4, $5, people wanted to buy calls. I started saying, well, wait a minute. Why don't you sell your calls? Why don't you sell your position? Why don't you sell calls against your position? Well, I don't know this, but I don't think Ham appreciated that advice on my part. I have no idea. But right around then, Ham flew down to Florida to meet FBI agents and talk to Pam Bondi. And he had an in with Donald Trump. And he called me. I think he left on the Thursday or the Friday. He called me. We talked a couple of times. But then he was on flights. He was in meetings. And so if I called, he wouldn't pick up. I might hear from him later. But Saturday, we exchanged phone calls. And finally, Sunday, he called me. And I called him back. I mean, it's once things get in that rhythm, you're not at your phone when somebody calls. It's fated to be that way. I don't know what I was doing. I might have been, making lunch, or I might have just walked out to get a cup of coffee. I don't remember. But as soon as I came to my phone, which was on the charger, I called him back, and he picked up. He said, man, you've been hard to reach. I said, so have you. I've called you back every single time. But you've been on the plane, you've been in meetings. He said, yeah, that's true. How about we do a call tonight? or today? I said, sure, anytime, anytime. I'm here. And he said, okay, I'm going to play racquetball now, and then I'm going to call you. Well, he, instead of calling me, he went on and did a call with a guy named, I don't know, some bodybuilder looking guy. Can't remember his name, with Kristen Shaughnessy, who's a sweetheart. And so he started doing his calls with them. And he never called me again. A friend of mine told me when someone asked him, he said that, oh, I don't speak to William anymore. So it was Ham's decision not to speak to me, and I would suggest you ask him why. It wasn't mine. The final thing I'll say about Finger is, and I said it all along, but I do not believe Finger will squeeze. I think that's all bullshit. Now, if they can raise $5 million, pay somebody in the Cayman Islands or the Bahamas to turn on the buy machines, and if they can get somebody to put $50 million into a trading account so the buying machine can start doing the buying lickety split using the 50 million to back it up, well, you might get a squeeze if the promoters can get the stock up. But I don't think anybody's going to put up that kind of money for Finger to squeeze. I lost confidence in the fundamental story of Finger when I think they had a huge opportunity to go forward in a huge way with this C2 contract, crisis and control. I forget what C2, the two C's are: combat and collect, crowd control, whatever it's called, C2. And they raised $5 million using Roth Capital. And if you, Pidson, remember, since you care about your account so much, the stock was trading at $2.80, and they did the Roth Capital offering at $1.50. And then the street drove the price down to $1.04 to be exact. And it didn't, they weren't successful in collapsing it. But that deal was largely financed by the Toad, something like 80% of it. So despite knowing that his stock was under pressure, the CEO went ahead and did the deal anyway. Ironically, I think he had no choice but to take that money. And when matched with this exclusive countrywide C2 contract to build out command and control vehicles for the government and local governments, this is a gigantic opportunity. But we didn't have information on it. I went to New York on my own dime, interviewed Martin Shen. I saw the glossy catalog, I guess, the marketing material, a hell of a thing. It was pretty impressive, but I wasn't allowed to show it or quote it. Anyway, you've taken up 40 minutes of my time here on a dead story, but if $5 million were used toward the command and control contract, and if it were exclusive, and if it were nationwide, that had huge potential. And I think when the stock in that spring went to $3, $4, $5, I think Martin should have done another deal with Roth Capital and with the Toad to raise $20, $30 million, even if that when the stock was $5, even if he had to do it at $3.50 a share, but he didn't. That either said he doesn't have the ability to think strategically and to take a calculated risk because he knows he's in a fight to create revenue, or it meant that the C2 contract really wasn't what was advertised, or it meant China was in a hell of a lot of trouble. But he didn't do it. And then the annual report came out. There was no discussion of the C2 contract. And they did another financing with insiders and friends of the company. It was announced. That's fine. Totally legal. But even though they did it at a discount to the market price. So here we are a year later after the Toad financed, and he's a short seller, financed the company, and we haven't heard about the command and control contract. They've now hired a company named O'Reilly or something like that to raise $50 million in at the money money. In my opinion, it's a front. I don't know. I haven't taken the time. I think they found an Irishman, or they found a company that has an Irish name, and it's just a front for the same criminals. But it's clear, Pitson, that Finger, on a cash basis, needs about $1 million a month to operate after accounting fictions. I think they lose about $500,000 a month. And I'm not an accountant. The company for the last 3 years has done $35 million in revenue and has not made any money. In fact, like I just said, it loses somewhere between $6 and $10 million a year. We haven't heard about the command and control contract. They hired O'Reilly. They're going to have to do another financing. So it's not that I don't follow Finger. I think it's a mistake to get excited by Finger right now until they either do the financing or announce the results of the command and control revenue that's been out there for a year, or both. I've been hearing there's a lot of positive things going on at Finger, and there may yet be another chance to trade Finger in the first part of next year. But I wouldn't touch it right now. All the evidence is that it remains a top-up story, which is a low margin business, profitable, pretty reasonably safe, but it gets returns that you could get at a grocery store, 3, 4, 5%. And there's no backing on Wall Street for it. There's no huge amount of money coming into ETFs, into mutual funds, into retirement accounts with the goal of investing in companies like Finger Motion. It just doesn't exist. The whole story with Finger Motion is it's going to be a short squeeze. It's not. It's not. It's not going to 3,000. I doubt it goes to $10. People still want to believe that it can, because it's going to be life-changing, and they can't accept that the market is corrupt. But I think people have to face the fact that Finger Motion's got a decent group of investors. It's got a really polished management team. And I think there's very few CEOs I've met that work as hard as Martin Shen or have the integrity of Martin Shen. But it's a weak-ass story. There's no growth unless they get an insurance deal done, no evidence. There's no growth unless they get a cloud deal done, no evidence. There's no growth unless the command and control contract comes in a huge way, no evidence yet. And the same critical view that people are giving Railtown, they should be giving Finger, but they're not, because they hear this breathless, hey, it's going to go, it's going to go. Well, there are probably 1,000 people buying calls in Finger, creating premium, and the price has been going up. My opinion, Pidston, that's so O'Reilly can do a financing. And I would watch for a financing to come out at $1 or $1.25 right about now. So it's not that I don't follow Finger. I think it is a stock that's about to have a financing priced below market. It's about to have another period of time before we hear about revenue, and there will be no earnings. So I think it's best for investors to wait until the financing is completed, and maybe to get an update from the company. There'll be plenty of time to get into the stock, maybe in February or March, and trade it. But it'll be a trade. It will be what you should do with a Ham story. Ham is an institutional trader. If you're one of the first to act, when he comes out and says, oh, it's going to go, buy it. Buy the stock. Don't buy calls. Just buy it. And as it goes up, get out. And don't listen to the 3,000. Don't listen to the hundreds of dollars. Just get out when it goes up. It's the hardest thing emotionally for a retail client to do. To buy when it's down, to sell when everybody else comes in with a crescendo of enthusiasm, is the hardest thing to do. So I think it's a stock to stay away from, Piston. But I think all these stocks are stocks to stay away from, all of them, except for Railtown, because I think Railtown is going to come out of this hell, and it's going to create equity in people's accounts so they don't ever have to deal with stocks down in this sewer again. Railtown now is 267,000 shares, 27 by 28. Last trade 120,000 shares. So we didn't miss anything. So I don't own Finger. In fact, the only thing I own is Railtown, and it's primarily in my retirement account, and that's where I am. Will I ever buy Finger again? Probably not. I think it's time to move to the mining shares, owning physical metals, buying oil and gas companies with cash flow, and investing in oil and gas projects, putting money where people know how to do it. I think people should get away from the charm boys, get away from the over-the-counter markets, get away from being the sucker who gets stolen from by co-conspirators on a campaign to defraud every investor. That's how I think. Today is exactly 300. And by the way, Pids, ask Ham why he stopped talking to me. But at this point, it's just fine. It's just fine with me. Uh, Justin Babish, today is actually a year from my first 200 shares bought. Good for you, Justin. Good for acting. All right, I'm going to have to pick a time to end because I'm going to have to get ready for my call today. Good for you, Justin. That's awesome. Bravo. Bravo. Joe Marty, I believe this is going to be your main talking point to the company, but making sure they're not going to do a toxin finance. Okay, so Marty Party makes a good point. I believe this has to be your main talking point to the company. Make sure they're not going to do a toxic financing. To me, that is the only way the story can get destroyed. Exactly. And I already talked to the company. It was not, they called me uh, to set up a call. And you know what? I will address that, but it is clear to me they are not going to do a financing, uh, whether it's toxic or not. I did suggest that I could, with my offshore investors, who I haven't done anything with in quite a while, but I do believe I could raise money, particularly out of the Middle East and Europe, but also with another associate here in the States. So I would be interested in participating in a plain vanilla financing. And I said, we could do it, just plain. Well, he didn't. I don't think they need money, as I'll show you in a second. But he didn't close me down. So if it comes to a point where there is a strategic financing, and maybe I bring the strategic investor, but maybe I can pry it open for some people here to invest in, I'll let you know. But they have no intention to do a toxic financing at all. Marty Party, I think they're smarter than that for sure, but wouldn't hurt to verify it. Yes, I agree with you, and I will. Let me write it down. Marty Party also, they may not answer this, but is the company's goal to grow and become a monster on its own, or are they building to sell the company? All right, I'll write it down. Unicorn or buyout? It's a good question, Marty. It's a good question. Hi, Steve. Good morning. Good morning to you. Giuseppe. Um, I invested initially because of Conductor. Story got much better. Does Conductor have clients and or pipeline? Okay, good question. It's a good question, Giuseppe. Krypton, that's a good point. Just say go back and watch old videos. That's a good point. I can't tell if that's a good person or not, so I answered it. Scott Walkowitz. Good update on Finger. Thank you. It's distracting. I think Finger, along with some other stories, probably is an energy sink. In other words, it's a sunk cost already. And the way to get our money back, I believe, is Railtown. My favorite other investment is silver, but you know, uh, uh, that just didn't have that alternative available. Uh, I think I started to make the point the other day that the numbers are pretty similar to me. It's just pennies with Railtown, but silver went from 26, 25, 24, 27 to mid 30s, pulled back, went to 40, pulled back, 42, pulled back, went high 40s, pulled back, finally broke 50, 52, and it kind of pulled back a little bit, but now it's on its way to 75. That's what's going to happen in Railtown. Same numbers, same exact numbers, only pennies, and it'll happen more quickly. But it'll give you the same feeling when it happens of, oh my gosh, I should have bought more, or hey, this is exciting. It's finally, and there'll start to be news and headlines and all that. Right now it's 27.1 to 28.6, 297,000 shares. Again, 10,000, 10,000, 10,000, 2807, 2805, and 28. I would say that's buying. And it looks like real buying. So it's confusing. Let's see what it's doing in Canada. Darn it. There we go. The volume in Canada, 10,000 shares. So everything's happening in the over-the-counter market. It's all fraud. It's all shutting down one LLC and moving it to another, or moving the trade that's undelivered in one LLC, the prime broker, shifting it, just crossing it, getting it over to another so it's a different prime broker, and they'll walk away from those trades. They'll walk away. But they have the attorneys like Mark Bazile to protect them. I'm not picking on Mark Bazile, but there's not a single instance where he ever made money for shareholders that I can find. Ever. Ever. So stop thinking that there's some white knight out there. Mark Bazile's looking out for Mark Bazile. The shorts are looking out for the shorts. The toad's looking out for the toad. Look out for yourself. Buy Railtown. Railtown's the way out. And never go back. Stop listening to the lies. Stop listening. 9,879 shares traded in Canada. That's it. Well, anyway, that's what's on the Canadian Stock Exchange. Maybe they're doing some dark trades somewhere. 27.85. The bid is 27.1. So they just did 10,000 shares at 27.85. That might be driven by selling that one. Maybe not. Cindy Lou Who. Hello, Cindy. I haven't been here in a long time, but I thought I'd say Merry Christmas and Happy New Year. Merry Christmas to you, Cindy, and peace, and I hope you have great holidays. The conversation here is getting old. Yeah, that gentleman brought up finger again. And it is a repetitive conversation. I agree, Cindy Lou Who. But blessings to you as well. Thank you for answering my question about finger. Good summary. You're welcome. Marty Party. Good luck today. Thank you, Justin Babish. I would want to ask if RT is likely or interested. Okay, that's a good question. If they're interested in expanding their partnership with TELUS to other AI data centers. Okay. That's a good question. I'll write that. Justin, it's very good. And then G. Diddy, please ask about the relative profitability of each. That's a good one too. That's a good one too. That's a very good one. So I just want to show what we know. I wrote it down. You can come up with your own. But all right, last trade 27.85. It's 11 o'clock. I'll go. I think I'll just go another half an hour, and then I've got to, I've got to get ready. I just can't keep up. So there was a trade for 10,000 shares at 28, trade for 10,000 shares at 28.05, 10,000 shares at 28.07. I think they're trading 10,000s back and forth, unless those are real trades, somebody just dumping. I think, I mean, 0.0015 on 10,000 shares is $150. And if you can do it quickly by computer and you do it all day long, you do 10 of those trades, you've made over $1,000 for the day. It's better than cleaning out bedpans. GDC's having a good day today. It's up 40 cents at 566. Pretty good. All right, I just want to show you guys a few things quickly. This is what Marwan and Corey hold in the stock. So there's 40,000 shares are not being sold out of an estimated float of around 100,000. That's 40,000 shares. And they own it alongside of you. Here's the consideration shares. Instead of 50 million shares to buy AIP, it was 49,476. So they did the deal with 500,000 shares fewer than originally calculated. This is June's number of shares outstanding. But they've since updated that with the presentation, which rather than go find it because I'm running out of time, I'll just show it to you. As of the end of August, the fully diluted number of shares is right there. And founders and directors have 54,742,000. And then there's employee options. So they own about 38%. So it's 172,538,000 fully diluted. I'll show you the number when it's added together. Here's proof of the ownership of the insiders. This is an important thing to bear in mind. The company has a number, particularly in February, if you look here, 6 million, 7 million, 8 million, just call it 6 million at 30 cents. It's almost $2 million in money coming in when these warrants get exercised in February. January, it depends on where the stock price is, because right now the stock price is below 42 cents. But I would guess there's a potential they'll bring money in January. But March, there's more. June, there's more. Money's going to come in regardless of financings, or even, I think revenue is going to come in more quickly than that. But anyway, it gives you an idea where this is the fully diluted in their June. Did I say diluted or diluted? And that's, oh, yeah. I want to just show you this calculation. This is enterprise value. So how you do it is you come up with an estimated annual recurring revenues. You can do it at home. And then you use a multiple. You can pick that multiple at home. You subtract debt, but there really is negligible debt here. And anything, it looks short-term to me. It really, there is, I think you can ignore. But if you want to put in some number there, you can reduce it. Like, what are they going to have to spend on salaries? I mean, you can add it in there. And then you divide it by the number of shares. That's the denominator. And that's the number, 222 million shares. That's what you divide it by. So if you come up with revenue up here of it's projected revenue of 100 million, and you multiply it by 22, which I think is a low multiple. Multiples depend on how rapidly it's growing, how mature the market is, and what the confidence is in that future growth, and if there's a bidding war, all those things. Langchain was just priced with a multiple of give or take 85x. So, you can come up with anything, but if you assume they're going to do 100 million in revenue for the forward 12 months, you use a 22.2 multiple, which I think is low. You get $2.22 billion in that calculation, multiplying 22 times 100 million, and then you divide it by 222 million shares, you get a target of $10 a share. $10 a share. That's a reasonable estimate of the enterprise value for this company. And if you use 22 as your multiple, the question is, have you already discounted it for the fact that those earnings are going to happen in the forward 12 months? Or do you have to discount it further? And you could say, I'm using a 22 multiple, and to discount for risk that they don't get that much revenue or that revenue's in the future, instead, I'm going to cut it in half. And I'll say it's worth $5 a share. And if you find that absurd, you can cut that in half. You can come down all the way from a 22 multiple down to over 10. You can use a 5 multiple on 100 million, or the other way around is you're using a 20 multiple on 10 or 20 million. You can do anything you want, but the target on this stock is much higher than where it's trading right now. But you can use that calculation yourself. If the stock were to trade at a 22, if the stock today is pricing in a 22 multiple, if it's projecting that the company will do $3 million in revenue next year. So ask yourself if that's a believable number for next year. So what we know the denominator. We know that the shorts failed at their strategy. Railtown actually did acquire the AIP affiliate network for fewer than 50 million shares. We know, based on the corporate presentation and the interview with Dr. Tom Core, that currently the affiliates spend $120 million annually with various hyperscalers. And that's only 125 of the companies in the network. We know that the network is greater than 180 participants from the corporate presentation. We know that the network has 5,000 end users as clients. We know that, I think it's called Univest Software. That's a typo there. I think it was called Univest Software. Has 3,000 clients. We know that the company and the network have the intention to cross-sell their own products across the network, but also the conductor and the rail engine to affiliates and end users and to that Univest group. TELUS has built 2 data centers. TELUS intends to move at least a subset, if not all. Well, I would imagine it's not all, so we can say a subset of the 20 million connections that it currently has to the new data centers. Railtown and TELUS will split revenue earned at the data centers that uses the Railtown product. The strategy of acquire and consolidate, the roll-up of the network companies, currently involves over 400 million in annual recurring revenue. All of these numbers will continue to grow. These are the things we know. What we don't know is what multiple any valuation actually will occur. We don't know for sure. I guess I can get rid of this. We don't know how many shares will be issued to do roll-ups, although they're not going to do it down here. We don't know the exact revenues or the revenue projections. There's some things we don't know, but we can make some assumptions about. LangChain was valued at 1.25 billion based on extant revenue that could have been as low as $500,000. We don't know. They didn't explain it. But using June's revenue numbers, they extrapolated annual revenues at 12 million to 16 million. Based on that, they valued the company at over $1 billion. So there are some unknowables, but there's some really core solid foundations that we know that make Railtown worth much more than where it's trading right now. Now, what are those assumptions? Well, I think you have to assume the multiple is going to be better than 10x, probably better than 20x. If you go up to 100x, I think you're starting to gamble a little bit. But 20, 25, 30x, that's seems to be an all day long multiple for a growing software company and AI companies. We don't know the revenue. We do know they're going to revenue share. That's the one thing we know, is that 120 million is going to move over in the future. And that's all that matters. 10% of that going to Railtown is 12 million. 20% of that is 24 million. 15% of that is 18 million. Right in the sweet spot of the LangChain valuation. LangChain doesn't make any money. All of this money will be largely margin. It'll be profit. It'll be cash flow. So we do know that number, and it will be projected by analysts and may be discussed by the company. Just that number alone may entitle the company to a LangChain valuation, which would be a pretty big number. The stock is cheap. And once this year-end selling is gone, once the tax loss selling is gone, once some people I don't want to say weak hands, because a lot of people are strong hands. They're just sick of it. Maybe they've become weak hands. Maybe that's the way to say it. Not that they're not strong or smart or don't have wherewithal. Their attitude has changed. But the reason to sell for year-end benefits will stop on Wednesday. All right, Justin wants me to ask. Oh, I wrote that down. It's a good question. G. Diddy wants me to ask. It's a good question. I already wrote it down. Justin, please tell RT that the majority of our group views Railtown as a long-term investment, not a trade. Okay. I will make that clear. And by long term, we mean by Friday. No, I'm just kidding. Hey, Silver Skyrocket. Hello, Red Pepper. Um, oh, yeah, last question. Can we please have some warrants? Lots of that. Well, I don't think they'd issue any warrants. But if we can participate in the financing, we'd probably get, depends on what the financing is. I hate warrants when it comes from a group like Jeff Easton's or the Toads. But as a plain vanilla financing, they make sense. Justin Babish, I wonder if TELUS gave them the revenue sharing deal because they are supposed to be exclusive. Well, I can ask that. But I want to be careful because exclusivity can go both ways. So I may think before I ask that. Because if you require TELUS to be exclusive, they may require you to be exclusive. And Microsoft runs over 400 data centers worldwide. There's over 200 data centers in Canada by memory. The United States leads the world in data centers. So if you want to transfer the applicability of the conductor tool to other data centers, you don't want it to be exclusive. I will ask that, but I think the better question is, well, it's not better, it's just different. But the better question to ask is, or a different way of asking it is, does TELUS need conductors, rail engine tools in order for TELUS to offer a competitive, a state-of-the-art, superior data center to AI companies and other developers? In other words, is the conductor product offering critical? And I would even go further and ask if it's unique. You know, what is the competition? Is LangChain a competition? Could Sequoia or could Google just put $10 billion at the problem and blitz by Railtown with a better product? You know, and I'll try to ask all those things. It looks like there hasn't been a trade since 10:01, but I never trust the time and sale on my service. But the volume is still, oh no, it's higher. It's 317,000 today. We're kind of in the green, but I wouldn't sleep on the fact that they might try to hit it again. But I like your question, Justin. Red Pepper Ronnie, please ask RT to stay away from toxic financing. I addressed that Friday briefly, and my feedback was, number one, I'm completely convinced that they understand the problem, and secondly, that and I was, well, maybe I shouldn't say, but I was speaking to someone that would know, and that I just have complete confidence that they don't intend to do that. and they don't need to. Red Pepperoni, Merry Christmas. Well, Merry Christmas to you. Justin, if RT wanted to be the architecture platform, see, I don't know what that means, but I'll write that down. I'll ask. That'll embarrass me because I don't know what that means, but why not ask? All right, I'm writing it down. They could sell and set subscription price and not necessarily revenue share. True, they could use a different revenue model. When you look at Lang Chain, and I showed it to you because I'm not going to show you now. I'm gonna end in 6 minutes. But when you look at Lang Chain's subscription method, it just seems to be a website where you click on basic, premium, and pro, or whatever they call it, and it's as easy as clicking a button and I guess giving a credit card, and you're signed up. So maybe you're right. They could create a subscription model that way instead of revenue sharing. The stock is 27.57, 6. They're just showing a lot of different bids. So it's 27.6 basically versus that same 52.5. Only now it's 53.4 at 28.44. The volume is 317,000 shares, and there hasn't been another trade. So it's all, computers talking to each other, doing nothing. Retail becomes the catalyst. Retail becomes the accelerant. Retail becomes the STP put in the carburetor. So there's a flurry of trades. The computers go back and forth. But otherwise, they prearrange trades, which is illegal. They collude and cheat. Ward Richardson, Rail Engine. Yes, I'll ask about Rail Engine. Okay. What is Rail Engine? I'll do that. Krypton. I think in this particular sector, there is less risk of toxic financing. Not to say it doesn't exist just much. Yeah, I think that's probably true, because the one thing the criminals can't figure out here is how quickly could revenue overwhelm their puny plan, their puny but effective plan. My opinion, going back to Finger, without damning Finger, is that it's without a surprise like the C2 contract, or Pacific Life Re coming in with a monetization scheme, which could happen. It's hard for Finger to really accelerate its revenue beyond its roughly 35 million a year, but it could happen. It could happen. But with Railtown, this sector, the revenue potential is so massive. Railtown could get 25 million from revenue sharing, just moving existing spending by the network over to TELUS. That could grow. That could grow to 50 million in the future. TELUS could move its customers over to the TELUS data center and ask them to use Railtown, And that could be many multiples. And then you've got the roll up once the stock price goes up. You've got the roll up of maybe 100 or 200 million out of the 400 million in existing revenue, and that revenue can all grow. And then you've got Railtown selling its services, subscription or otherwise, completely outside of the TELUS orbit, and that could be a big number. So they don't have any control of that, and they don't want to be short in the face of it if a human being even has looked at it. But they will look. They will look. Ward Richardson, just getting in here, William. Ward, you typed too quickly for me. Just getting in here, William, are getting in touch with RT. I see you are asking for questions. Yes, ask me a question, and I'll tell you some lies. That's a song. It's a lover's song. Who knew that you should lie to for all that? All right, Akira Nova. All right, Akira Nova. That's great. I might already have him down. I won't double count it, but I'll make sure. That's great. So it's 11:30. I'm going to get ready for my call at 1 o'clock. Just sit down. Ignore, it's so complicated. Ignore every other source of revenue. Just look at the 120 million that the current network companies spend. 125. I think Dr. Kaur explained those 125 are in Canada. So just look at them, because they have an incentive in Canada to move their spend to a Canadian AI factory, a sovereign AI factory. TELUS is ready. Railtown owns that network now, and Railtown is going to split revenues if they move it over. Again, it doesn't have to happen by the end of January. Doesn't have to happen by the end of March. It just has to happen in a way that people can put it down on their spreadsheet and put it in their research report and say over the next 12 months, 18 months, 24 months, we expect Railtown to bring over to the TELUS data center $120 million of current spend by their own network, and we expect that revenue to grow as the number of companies grows, as those companies themselves expand to their end users, but just use 120 million. And if you want to haircut it, say it's 100 million. And then pick a percentage of revenue share. I think 10% is way too low. 50% I think is way too high. 15% might be too low. I think 30% is probably high. So I came up with 20%. But you can use 15%. 15% times 100 million is 15 million in revenue annually. And once it comes in, it sticks. It's there year in and year out. And it's just revenue sharing in TELUS's data center. So it's going to be, the majority of it's going to be cash. I mean, I'm sure they'll net out something, but we'll find that out. But it's got to be close to 100%, over 90, over 95%. cash flow. So anyway, if you use 15% times 100 million, you get 15 million. Now, then the next thing you got to come up with, what multiple do I use? Do I use a low multiple or a higher one? I would argue you use a higher one because that 15 million is going to grow and there's all these other revenue sources you're leaving off. But if you don't want to do that, what number should you use? I mean, finger motion trades at 3 times revenue now. Do you use that? That's a low number. Do you use Lang Chain's multiple of 90 times estimated revenue? Do you use SoundHound's number, which was, I don't know where it is right now, at 35x? Do you use kind of a middle of the road computer software, growing software companies, 25% at 25x? Do you use some of these huge trades, huge valuations, 100, 150, 200? I don't know. I would say, 25x is really being cautious, really being cautious. And so that gives, just using that low number, that would give you an enterprise value of 375 million. You divide it by 22 million shares. That gives you $1.70 target. And I think that's conservative. So remember, you can be buying today for a January effect rally, because today, tomorrow, and half of Wednesday, tax loss selling is going to come in. People that just want to clean it off their portfolio, they may sell. And then these guys that are doing the high frequency trading, they want to move their trades. And they want to be able to show their clients, hey, look what geniuses we are, cleansing the markets. But that all stops. That all stops Wednesday. And then I don't think the selling, the manipulation will stop necessarily in the first week of January. They may still press their bets a little bit. But come the middle of January, you're going to see information, research probably, and some of the institutions are going to get back to work. The small ones that can buy under $1 and the bigger ones. And once you start seeing that buying, the high frequency snipping of a penny, half a penny, an eighth of a penny, a tenth of a penny at high speed, that can all happen at higher ranges. That can happen as the stock goes up. They can adjust their portfolios to buy in the morning and sell at the end of the day because they're so critical to the health of the markets. Anyway, just a very low estimate gives you a $1.70 target, which is 6x from here. So have courage, buy, hang on. Hey, flying bus driver, Merry Christmas to you. New total, all right. $107, that's awesome. Awesome, awesome, awesome. Thanks for nudging us into silver last year. Yeah, I regret that earlier this year in June, I made my entire focus Railtown because I had the impression Railtown had urgency, and I thought we could get Railtown up and then buy silver in the fourth quarter, third quarter of this year. Didn't turn out that way. So we've missed a tripling essentially in silver. But silver's story is not over. I think there's a lot more to go. It just is very volatile. So if someone wanted to pair a silver position with a risky transaction, which was my strategy a year and a half ago, that let's say someone was going to put 5 million up in a mining, non-liquid mining transaction, they simultaneously bought 5 million of silver as recently as a year ago. They'd already have 12.5 to $15 million in silver, so they'd have their ownership of that investment essentially for free. But anyway, it's all about waiting for bureaucrats and waiting for things to happen by people whose motives are different than making money. How do you have my fiance? Well, I tell you one thing. I'm not in love with your fiance. He's the wrong kind, wrong sex. Yeah, I might have your fiance instead of your uncle. But let me look that up and ask you later, because I need to get ready. It's now 11:40, and I want to be in good shape. Now let's see. I can't remember when you gave me his numbers. Yeah, I'll look at the list, Akira Nova. I'll look at the list. You might be right. That might be what I was remembering. All right, everybody. I'm going to get ready for my call, and I will, depending on my energy level, I'll come on afterward and update you. I've got to make sure that what I'm told is what I can share. But I think that's the reason for the call, is to here. Let me tell you the purpose of the call. They're going to give me a full presentation, and they're going to answer 3 questions. One is, what does Railtown do? Seems like a good question. And then they're going to answer, why did we buy AIP? And why did we, go through that hell? I like that. And then number 3, what does the Thales deal mean? Those are the 3 main areas of discussion. So I'll look forward to talking to you afterward. Don't stress out. Let's look at the stock price. Don't stress out if they get it down today. It's just the same reindeer games. But at some point, they'll do their trading from a higher price. It's 27.5 to 28.42, 319,000 shares. Last trade, 100 shares. Somebody had to get out of 100 shares. They had to sell $28 worth of stock. Just had to. It's manipulated, my friends. So anyway, cheers until later.